Welcome to my YouTube channel. This is a channel based on Forex trading. I previously started the channel maybe about a year ago, and I stopped, and I've decided to restart the channel because I have a little bit more knowledge that I want to share, and I've decided to be far more consistent with my uploading of videos. Previously, the channel was about forecasting what my trades will be for the upcoming week. I'm still going to stick to that. But before I even get into that, I'm going to start off my first few videos with basically some information about the Forex market and to show how I go about setting up trades. What are the things I look for? How do I set up my chart, and what exactly do I use as my trading entry, and the psychology that I use in order to maintain longevity in the Forex market. Now, let's first start off with what is Forex. Now, Forex stands for foreign exchange. So Forex trading is foreign exchange trading. And we all, in some ways, have, are, or will take part in the Forex market. So let's say you're traveling for a vacation and the country of your origin has a different currency from your destination country, the place that you're going to vacation. You need to convert, therefore, your local currency into that foreign country's currency. And the conversion of those two currencies, that's what Forex exchange is. It's the conversion of one currency to another currency. That's the foreign exchange. And what Forex trading does is that it exploits minor changes or minor differences in the value of those currencies. And you exploit those changes to make a profit or to make money off of that. Now, the Forex exchange market is quoted as being worth, I think, the last time I heard it was about 7 trillion. It may be inching closer to 8 trillion presently. But that's how liquid the market is. So it's a $7 trillion market. So there's a lot of money involved in it, and therefore there's a lot of opportunities for you to also make money. And that's why those who've been here for a long time, that's why we love foreign exchange. That's why we love trading Forex, because it gives us an opportunity to make a significant amount of money. Now, it must also be understood that Forex exchange trading is very, very difficult. Now, why do I say it's very difficult? It's because about 95% of persons who trade Forex are not profitable. So that means that 95% of persons who trade are losing money, whilst only 5% make money. And the difficult thing is that you can have a winning strategy, but if your mindset, your psychology isn't correct, you'll still lose money. So it's not just about finding the right strategy, but it's also a very mental game. And that's where a lot of persons lose as well. And so one of the first things I want to get into in this video is the psychology. In this video, we're not going to talk so much about the charts and analysis and all of that. We're going to deal more so with the actual psychology, what it takes to win. Now, let's first start off with what does it take to be a winner? In order to win, you have to put in the hours. All right. I've seen online persons say that they started trading 3 months ago and they're already profitable. And some would have said 6 months and a year and so forth. Um, Personally, I don't think that you can become profitable in 3 months unless you have a mentor that you sit down with um, for hours and hours a day with that person, and they're showing you everything, and then you go and you repeat what you've learned, and you spend the entire day, day after day, consistently practicing the very things that you were taught. I don't think it's possible for you to become consistently profitable in 3 months. 6 months potentially, but not 3 months. I think you need at least 6 months to a year in order to become profitable. And part of the reason why I say that is because as long as you get involved in Forex trading, you're going to lose. And losses are oftentimes very painful. And when you lose and you lose consistently, what's also going to happen is going to break your mind and you're going to want to quit. You're going to want to give up. And that is where you become a failure. If you can stick with this, you can journal, you can see where you've lost, where you've gained, what are the habits that you use that cause you to lose, and the habits that cause you to win, and you maximize on the win and you get rid of the things that you do that causes you to lose. Slowly and surely, you can start to become profitable. But that's the psychology, that's the mindset that you have to take, and you have to be willing to lose. Sometimes you can have a winning strategy and you do all the right things, and you will still lose. And at that point, you have to just accept that, okay, that's just the way the market is. That's just the way the market is. I did everything that I needed to do. I didn't win. I'm not going to give up. I'm not going to stop. I'm going to come again tomorrow. I'm going to do the exact same thing. And if I lose tomorrow again, I'm not going to give up. I'm going to do the same thing. And that's how you win in Forex. You cannot count your ability to be profitable solely based on the fact that you have lost. Because even when you do the right things, you still will lose. For example, this week, I took the perfect trade according to my setup. It was an A plus setup, and the market just spiked, took me out of the trade. Took me out of the trade. And I reviewed, I went back to it. I was like, did I do everything right? Did I miss something? Did I miscalculate? No. I didn't miscalculate. I didn't do anything wrong. I did exactly what I was supposed to do. It was just the way the market is. Later on in the week, I got the exact same setup. I executed the exact same way, hit take profit. And that's the way the market is. That's the way the market is. It's unpredictable, even when it seems predictable. And you just have to, the winning mindset is that I know my strategy, I know my strategy works, and I'm just going to execute that strategy, regardless of whether it wins or it loses. Every time that I decide to enter a trade, I'm going to stick to this strategy, and I'm going to leave it up to the market to decide the outcome. And whether you win that trade or you lose that trade, it shouldn't matter. What should matter is that you executed exactly the way that you were supposed to. And that's what's going to keep you in the game. Right? So the mindset, you have to stick with it. First off, you have to get a winning strategy. But after you get that winning strategy, the psychology becomes even more important. So for the first, I'm going to focus on the psychology. All right. Now, the type of trading I do swing trades. So I usually wait for my particular setup. I enter on the 4 hours. So if I come to the computer at a 4 hour interval and I don't see something that I like, I come back to the computer 4 hours later to see what's going on, to see if now it has something that I like. And if it does, that's when I enter the trade. And I end up waiting 2 or 3 days for that trade to hit take profit. And for me, I found that that's my most successful way of trading and winning. So you have to find what trading style works for you. I've tried many different types. I've tried scalping. I've tried intraday trading. I've tried and stuck with swing trading. And for me, I found that that is what does it. Now, very important in trading is that you must log all trades. Every trade that you take, even if you enter a trade and 5 minutes later you close that trade, you must log that trade. So create a trading journal and show, you want to show the pair that you took, the time that you took the pair, so the date, the time, the pair, the lot size, the entry, the stop loss, and the take profit points. And then also you want to grade the trade according to your trading setup. So you can have trading setups from A grade, B grade, C grade. And you want to make a comment as to why you took that trade and your state of mind at the time that you took the trade, as well as the state of mind at the time that you closed the trade. So then you can go back and you can look, okay, I took this trade at what I thought was resistance or a support level. And well, I got scared because price retraced a little bit and I saw that I was in the red, so I closed it. Had I stayed in the trade, price would have gone all the way to my stop loss and completely knocked me out and I would have lost more money. Had I stayed in the trade, price would have come back to my into profits and eventually hit my take profit. You have to log all of that. And it's important to log your entry and your exit so that you can go back and you can look. How I became profitable is that I log all of my trades. And what I realized is that when I take trades off of a trend line, those trades were profitable. If I didn't take a trade off of the trend line, that trade was not profitable. I would have lost that trade. And the more trades I took off of a trend line, those were my profitable trades. And then I also looked, well, what happens when I take a trade off of liquidity zone, an area of interest, support or resistance? Well, yes, sometimes I would make a profit, sometimes I would. What would happen if I took a trade when that area of interest is intersected by a trend line? And so right at that point, that's where I took a trade. Oh, it was profitable. And I see that most times when I take trades at that point, it was profitable. And so that's what the journaling did for me. It showed me where I was making losses and where I was making profits. And so I focus now on only taking trades in the area that I was making profits. And I stopped making trades in that area where I was not making profits. Good. What was the risk reward ratio that I used that allowed me to be more profitable? Well, when I took a 1 to 3 risk reward, very often price would retrace and completely change direction before it hit take profit. The next thing I know, price was at my entry, and if I stayed in it further, price would hit my stop loss. So I stopped taking 1 to 3 risk rewards. And I started to take 1 to 2 because when I realized when I took a 1 to 2 risk reward, I was more profitable more frequently. That price would usually retrace or change direction after that point of the 1 to 2 ratio. Okay, so I'm not going to take 1 to 3 risk rewards anymore. I'm just going to stick with that 1 to 2. So with that journaling, I learned what my most profitable trades were and what my most profitable risk reward ratio was. And I also gained my trading strategy. And so those things come together is what my trading strategy was. So this all works with your mindset and your psychology. So you got to get your profitable trading plan. In order to do that, you have to journal and then scrutinize that journal, do an analysis. That's one. Set up or decide upon your risk to reward ratio. Don't be greedy. 1 to 2 is good enough. Are you going to be a intraday, a scalper, or a swing trader? All of these things come together to decide what and how we're going to go about trading. Because all of these things, you need to employ them all at once in order to become profitable. You can't just use one. Everything has to come together. Everything has to be used at one time in order to be profitable. And every time you execute a trade, every single time, that's where the discipline comes in. You cannot stray from it. Every single time you execute a trade, you have to put all of those things into play. And that's how you take that step from unprofitable to profitable. Now, the next thing on the agenda is, right, I'm looking at what I've scheduled here to talk about. How to accept losses. Now, a lot of persons have said that you should look at Forex as a business because it is. And in looking at it as a business, in business, you have to spend money to set that business up and to grow that business before you can even make a profit. And so when you take a trade, whenever you lose, you should look at it as just an expense of the business because you will lose trades, regardless of how great a trader you think you are, you will lose trades. And so you have to accept that this is all part of trading. So whenever you lose a trade, just accept it as a loss. Do not try to make that money back immediately. Step away, especially if you've been waiting for hours or even days for that trade setup. And you were so confident that this was going to be the winner. If you've lost that trade, step away from the trading platform, step away from your computer, take a break. Like I said, I enter trades every 4 hours on the 4 hour chart. So I step away for about a 4 hour and I come back at that 4 hour interval to see if there's any setup there that matches my trading criteria. So you need to take a breather after a loss because one of the ways in which you lose money, and a lot of it, is by losing a trade and then revenge trading to try to make that back. And that's what revenge trading is. You've lost, you're angry, you're upset, you want to get back your money, so you jump in the charts again and you take a trade. And oftentimes it's not ideal. It doesn't fit your trading criteria, but you're so emotionally caught up in it that you've got to make back your money. So you jump right in, hoping to make back your money, and you lose even more money. So the proper way to lose a trade is to accept that you've lost. Accept that this happens. You step away and you come back at another interval with a clear mind, not trying to win back your money. You see if there's a trade that fits your trading criteria, and only if it fits your trading criteria perfectly, then you enter the trade. And that helps you keep and stay in the game for a lot longer. The other aspect is when you start to win trades. When you start to win trades, you also start to feel invincible. So what you do is that you take more trades. Oh, well, I just hit this trade that was a 1-to-2 ratio, 1-to-2.5. And before that, I had gotten another one. And before that, I had gotten another. So I'm on a roll. I'm on a streak now. I've won 3 in a row. So let me increase the amount of money that I risk so I can make even more money. And that's where you lose. So you don't want to do that either. So losing is a problem, and also winning is a problem. So you have to keep yourself in check, both with your losses and with your profitable trades. The other thing is you want to keep the amount of risk consistent with all trades. Now, because I'm a swing trader, I don't take a whole lot of trades. And when I do take trades, I risk a significant amount. So I risk 3 to 4% of my account on every trade. And I try to take no more than 2 trades a day. Um, I won't lie, it's not easy doing that because sometimes I'm in drawdown. I've taken a trade that what I believe is my A plus setup, but I enter the trade and the trade is now in drawdown. I have a limit of 2 trades or 3 trades per day. So my trade is in drawdown, but I see a next trade that I think fits my criteria. So I open that trade as well. And sometimes both of them are in drawdown. And even though I've been doing this for quite a while, I too get scared and I'm like, boy, I don't want I don't want to lose 6% of my account in one day for these 2 trades. Let me close one because I get scared. And so I end up losing that one. But if I had stayed in the trade, I would see the price would have gone up. It would have gone in drawdown, but it would have hit my stop loss. It would have then changed into profit. And if I had waited long enough, price would have hit take profit. Now, what if whilst I was in drawdown for the first trade, I decided, so let's say I risked $500 and I'm in drawdown and I'm $250 in red. And I'm thinking, oh, I'm losing $250. Let me enter another trade. And instead of keeping that 3%, which is $500, let me try to make back this 250, even though I haven't closed the trade as yet. I presume that I'm going to lose that trade. So let me try to make back that 250. So the next trade that I open, I risk $750 because I want to make back the 250 that I think I'm going to lose, in addition to the 500 that I would have normally risked on that new trade. So I'm now risking $750 instead of $500. And if both of those trades lose, I've actually lost $1,000 there. Actually, no. I've lost $1,000 if I close the initial trade at that 250. If I don't close the trade, I let both trades run and I lose all 2 of the trades. I lost $1,250 because the initial $500 for the initial trade and the $750 for the second trade that I opened. So I've lost $1,250. And if I've kept that 3% consistent, meaning $500 for each trade, I've only lost $1,000. All right? So you want to risk the same, not necessarily the same amount of money, but you want to risk the same amount in terms of a percentage for every trade. So let's say you have $100 account, you're going to risk 3% for every trade. 3% of $100 is $3. So every trade you take, you're risking 3%. So let's say you risk your 3% and you have a 1-to-2 ratio, risk reward ratio, and you win. So now you have $106. Your next trade, you're either only going to risk $3 or you're going to risk 3% of $106. What I tend to do is I tend to wait, let's say a week, and I risk 3% of what that final account balance is at the end of the week. So the new week, the starting week, I'm going to risk 3% of that new account balance. And if the account goes down, it's the same strategy I'm going to use. So on all trades, it's 3%. So you're not being consistent with the value amount, but you're being consistent with the percentage amount. Don't change the amount that you, don't change the amount of money that you risk. The only way the amount of money should change is if that percentage, is that overall balance, when you plug in that 3%, when you calculate that 3%, cause it to increase because the account increase or decrease in whatever way. But always maintain a percentage. Like I said, because I swing trade, so I take fewer trades, and for each trade I risk a lot, which is 3%. 3% is a lot. Trust me, 3%. 3% is a lot. Some traders risk 1%, some traders risk 0.5%. I believe for smaller accounts now starting out, or for persons who have been trading for quite some time, and they've been pretty consistent, you can risk that 3% or maybe even 4%. For persons now starting out, trying to build an account, you might want to take a risk because you want to build that account. 3% is also something that you can do because 3% is a big risk. But for those who have a much larger account, you can break that down. You can decrease and go down to 1%, and that works as well. Good. I think I've covered as much as I think I can cover for this video. I hope you guys enjoyed it. I hope you learned from it. And I'll see you in the next video.